What is going on, investors? Hopefully guys are doing well out there. That is right. It is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technicals from all the major FAANG stocks, including Microsoft, Tesla, and Netflix. Let's kick things off like we always do with Facebook, otherwise known as Meta Platforms. Started the week closer to $217 per share, ended the week closer to about $210 per share. Now, Meta's AR glasses roadmap shows that Mark Zuckerberg is pushing hard for an iPhone moment by 2024, just 2 short years away. Now, these glasses are rumored in some cases to help replace the phone. That is what Mark Zuckerberg is really pushing. He obviously wants you to dump your iPhone, which has all these security and ad preferences that don't cater to Facebook. He'd like you to dump that for a pair of glasses. The other scenario is that these glasses help support a device like an iPhone or maybe a Google Android device and essentially work as kind of a heads-up display, showing you messages or other types of things that you want displayed on your glasses. Now, the source says that Mark Zuckerberg's ego is intertwined with the glasses, and so we'll see how hard he pushes these and see how successful a product this can become. And quite frankly, Facebook probably does need an iPhone moment or something akin to that, because Facebook's parent Meta Platforms changes its ad leadership and is wrestling with those Apple changes. Obviously, if you've been a fan of the channel and you followed this, obviously on Facebook's last earnings call as well, which was a couple of months ago, they outlined the fact that they're having trouble with those Apple changes. And we certainly outlined it here on the channel, the fact that they have not been able to push through about $29 billion worth of revenue, which is a significant amount of revenue. But outside of the fourth quarter, after these Apple changes, they simply have not been able to get through that. A change of leadership this past week could mean that they're still having problems. Now, Facebook does report their earnings about 12 days from the recording of this video on April 27th. We'll certainly keep a close eye on that, and we'll have a video following up when they announce those earnings on April 27th. WhatsApp gets India's permission to expand its payment services to 100 million. Currently, WhatsApp sits at about 40 million customers in India, which is one of its largest markets, and the National Payment Corporation of India allowed WhatsApp to expand to 100 million. Obviously, there's over 500 million users in India for Meta Platforms WhatsApp. Certainly, as they can expand that, certainly can create some revenue opportunities for Meta. Now, they claim nearly half of creators' metaverse sales are going to go to Facebook. This is certainly bullish if you are bullish Facebook. If you're bullish the metaverse is going to take a massive 30% fee on top of a 17.5% Horizon platform fee. Over at Facebook, they are going to take a 47.5% of the cut of any sales in the metaverse. Certainly could be beneficial to Facebook, but you also have to factor in, well, what if competition comes in and they don't take any fees, or they take 1% or 2% or 3% fees? Obviously, creators are out there. They're used to giving up a pretty large percentage of your revenue to either Google or, in this case, Facebook and Apple from a developer's perspective, and we'll see how this emerges. They're certainly being aggressive on that fees, at least in the early days of the metaverse. Moving on to Apple, start of the week at 167, basically flat. If you actually look at Apple on a technical perspective, and we will here in a moment, when you look at Apple on a daily chart, it's a little bit of chop, but if you look at it kind of on a monthly chart, it actually has started to flag sideways. But we started at 167, ended the week at 165. One thing to note about Apple is they report earnings about 13 days from the recording of this video on April 28th. We're essentially on the eve of earnings for most of these stocks. Now, Apple iPhone SE is seeing lackluster demand. This is according to analysts. This is based on kind of some supply chain data and the fact that these phones are in stock. And I think it makes some sense, okay? You think about the Apple iPhone SE user, it's probably somebody that wants a cheaper phone. It's somebody that wants a phone with maybe not all the major features that maybe an iPhone 13 or the newest models have. They don't need the latest and greatest. So there's a smaller pool of these type of people out there looking to upgrade their phone. But on the other hand, high-end MacBook Pros are seeing good demand based on the supply chain checks that this analyst did. And so that certainly will balance out that iPhone SE. Now, Apple iPhones are going to halt production in China amid that COVID lockdown. We're seeing this on a weekly basis. It seems that kind of a start and stop approach over in China to handle this. And it's certainly impacting not only Apple, Apple, but all these companies, including Tesla as well, which we'll get to here in a moment. Apple is to start making Apple iPhone 13s in India. This is certainly a bullish news. If you're like me, look, I'm not really concerned about my Apple shares, okay? I'm very happy with them, and they performed extraordinarily well over the last years that I've owned them. But one thing that if I were to say, bring up kind of a bear case for Apple is the fact that so much of their manufacturing is tied to China, and the fact that you have some political risk there, certainly, but you also have kind of the health risk as well. The fact that, the vast majority of their products are made in that country. The fact that they can diversify into India would certainly be good. They're still using Foxconn as a partner in that, but all things being considered, you'd love to see this as an Apple shareholder. I would love to see over the next couple of years, they diversify their supply chain outside of China. Again, nothing against China. They've done a great job making Apple the most valuable company in the world, but it certainly would be, from a risk perspective, take a little bit of that off the table. Apple CEO Tim Cook says pending U.S.-Europe legislation would actually hurt privacy and security. This is the argument that Tim Cook is going to say, because this is kind of their last Hail Mary, okay? There's a lot of pressure on them to either reduce or allow companies like Spotify or Netflix or any app maker that charges money for games or a service. They want to reduce that 30% tax that Apple is taking. Apple is saying that is in place to help privacy and security, two things that lawmakers tend to be, at least from a lip service perspective, care about. And so we'll see if Apple is successful in convincing them not to support those changes. Moving on to Amazon, start of the week at $3,060, basically flat. I mean, we've been sideways with Amazon for basically 2 years now. We'll talk about that from a technical perspective here in a moment, but inflation and fuel surcharges have come to fulfillment by Amazon. I certainly got this email earlier this week as I actually sell some products on Amazon. Not a lot. I mean, we're talking about $5,000 to $6,000 a month in terms of gross revenue, but now we'll see a 5% fee to help cover some of the fuel surcharges and some of the inflation that we've seen over to Amazon. Now, for me, the Amazon seller, this absolutely sucks. Me as the Amazon shareholder, I love this. Tack on as many fees as you possibly can and maybe leave them in place for an extended period of time, and that certainly would be beneficial to Amazon. Not in the most upcoming quarter. We'll see Amazon's earnings report the same day as Apple, in fact, on April 28th, but keep in mind that this 5% fee is implemented in the most recent quarter, so we really won't get to see data on this in terms of how it's performed. Will it turn sellers away? Will it just add to the bottom line or the top line over at Amazon? We'll have to see in the subsequent quarters. Amazon rebrands IMBD TV, and I think that's a great thing because you have to say that incredibly slow because it's a complete tongue twister. They've rebranded that to Freevee. I like that. That's a heck of a lot easier to say. And they're going to boost originals by 70%. This also probably couples a little bit with the fact that Amazon closed on that MGM studio deal that was like a couple of weeks ago. And so they certainly can incorporate that not only in Amazon Prime, but also this now Freevee TV streaming service. Moving on to NVIDIA, start of the week at 219, end of the week at 212. Had a little bit of an up and down week. A lot of news coming out of NVIDIA this week. Intel is making aggressive progress as it competes with AMD, NVIDIA, and this is according to Susquehanna. Now, look, I hear this all the time with Intel. They're coming up. They've got these products. They've been tested. They look good. And look, and I wouldn't doubt any of that, okay? But the fact is, NVIDIA and AMD have done a really nice job, I would say, over the last maybe 24, even 36 months, really capturing a lot of business that used to really just stream right into Intel. So I think it's still wait and see. Intel's products certainly could compete with today's products that AMD and NVIDIA are delivering, but who knows what AMD and NVIDIA have up their sleeves for 6 months from now, 12 months from now, and will Intel continue to be able to keep up with that? Certainly people that are bullish Intel would argue that. Now, NVIDIA rises as a new street upgrades on attractive valuation and their data center outlook. The company raised the price target up to $280, up from $250. Currently, NVIDIA sitting at about $212 per share. Now, NVIDIA should benefit from data center strength. The reason why I kind of coupled these is New Street said data center outlook looks good, and then Bank of America also came in and said data center strength and new products. This is according to Bank of America. Now, they've got a much higher target on NVIDIA at about $375 per share. Now, look, the analysts are all over the map with NVIDIA because Baird actually downgraded NVIDIA based on those order cancellations that we talked about last week and slowing PC demand. So depending on where you look at NVIDIA's business model, I believe that we'll probably see some evidence of a little bit of a push-pull, okay? The PC demand, I think we can all understand that that was really pushed forward during the pandemic. A lot of people had to get work from home PCs and that type of thing and probably upgraded their computer equipment. Certainly bullish for NVIDIA and all these chip makers. We're likely to see that demand slow a little bit. And then we also saw order cancellations, which the company and analysts kind of projected that would slow down maybe late Q2, Q3 with NVIDIA. Now, in terms of NVIDIA's earnings, we're still a little ways away. They actually don't report until May 25th. Moving on to Netflix, started the week at 347, ended the week at 341. Doesn't surprise me that this one slid sideways as we are just 4 days away from earnings on Netflix. That comes on 4/19. Morgan Stanley, this is ahead of earnings, trims Netflix targets on their near-term challenges. They trimmed the price target to $425. It was $450. Currently, the stock is sitting at about $341 per share. Truist trims Netflix target as well, but sees possible first quarter subscriber gains, so they kind of hedged their bet a little bit. They trimmed their price target to $409 from $470. Again, the stock is trading at about $341. Now, Netflix completed a tender offer for Finland's Next Game, which is a game maker. The company currently owns about 94.5% of the shares outstanding of this company, or the voting rights essentially, and so they essentially own this company. I like this push. Again, a lot of you that have been following this channel know for a while, we included Netflix on the FAANG Stock Recap show, and then we kicked it out, but I've recently more brought it back in. Number one, the valuation makes a lot more sense, closer to about this $150 billion mark. I've got a 30 forward PE on that. How accurate that is, I don't exactly know. From a technical perspective, which we'll talk about here in a minute, Netflix looks okay, but I've also seen a push into video games, which, look, I don't know if they're going to be successful. I don't know how much revenue or demand this is going to bring for Netflix's product, but I like the effort here. The company certainly can afford it. They certainly can do it from a kind of a user's perspective, but I also like the fact that they've been raising prices over at Netflix. They've been doing a lot of things. The last straw for Netflix is get into online advertising, create an ad-supported model that would just create a whole bundle of new revenue for Netflix. Moving on to Google, started the week at 2,629, and yeah, we're close to the bottom end of the range. If you got a little extra money in your account, tell you what, we'll talk about it from a technical perspective here in a moment, but Alphabet could be a buy heading into next week, end of the week at $2,534. In terms of earnings, we've got Google about 11 days from now. On April 26th, they share an earnings date with Microsoft, which we'll talk about here in a second. Now, Google pledges $9.5 billion in U.S. offices and data centers this year. That was up from about $7 billion in last year in 2021. So as a lot of offices, a lot of companies are shifting kind of to work from home environment, Google's actually double downing on offices and certainly data centers as well. You obviously need physical data centers, but they're doubling down on offices in Nevada, Nebraska, and Virginia, really across the country here. And Google, interesting strategy, quite frankly. Moving on to Microsoft, started the week at 289, ended down to 279. Microsoft, like we talked about, reports their earnings 11 days from now on the same day as Google on 4/26. Activists are urging Activision Blizzard holders to reject Microsoft purchase offer. This was from a minority shareholder, but one that is trying to make noise among shareholders to vote against the $69 billion acquisition by Microsoft. We'll see what happens here. Man, this has been kind of tossed around. There's certainly some regulatory problems as well. This deal is going to come under a lot of scrutiny from the FTC here in the United States and quite frankly, probably around the world. Microsoft could face antitrust scrutiny, not over Activision Blizzard, but over their cloud practices. As you'd expect with Microsoft, if you get Azure, they're going to want to sell you Microsoft Office. They're going to want to bolt on all their other products to you when you sign up for Azure, and obviously that could create some antitrust issues for Microsoft. Now, Microsoft earlier in the week tumbled a little. It says tumbled. It went down a little bit as UBS suggests Office 365 could see gentle deceleration. And this is kind of priced in a little bit to the stock. Obviously, during the pandemic, a lot of people, again, like we talked about, had to work from home, had to upgrade their software, upgrade their computer, upgrade their capabilities when they were working at home. And some of that pulled forward a lot of demand. demand for Office 365. Now, it's a product with huge amount of penetration. If you own a PC, chances are you own a product like this, or if you work for a pretty big company, chances are they have a corporate subscription to Office 365 as well. And so obviously, kind of the law of big numbers, at some point the growth rate has got to decelerate a little bit, but it's still a gigantic business, and quite frankly, I'd want to buy on any weakness related to that. Moving on to Tesla, I tell you what, there was so much news with Elon Musk and Twitter. If you want me to make a video on Elon Musk and the Twitter situation, leave me a comment down below. If I get enough people requesting a video, I've been following that extremely closely, reading a ton of information on that. It's an extraordinarily interesting event. I just didn't know if it really made for a good video, but if you want to hear my thoughts on that situation, you can more than welcome leave me a comment. But we're going to stick to Tesla here. They started the week at $9.92, ended the week at $9.85. Tesla is looking to resume their production at their Shanghai plant on April 18th. It closed, or kind of suspended production, on March 28th. I thought I saw that we had some rumors that it started back up, maybe on a limited basis, but maybe it's really hard to get information shocking out of China, but it looks like maybe April 18th. I mean, it's a fluid situation with this stuff going on in China, and we'll see how that impacts. Not necessarily going to impact the earnings this quarter. So we have Tesla reporting their earnings on, is it a shock? They're reporting their earnings 5 days from now on 4/20. I'm sure Elon Musk had something to that scheduling date, but it's not going to necessarily, we'll see some talk of it, and it could, based on the guidance that Tesla gives, or some of the, maybe the forward guidance that they decide to give, it might impact subsequent quarters. The fact that you're kind of starting and stopping in Shanghai and certainly other places around the world. Tesla sold 65,814 China-made vehicles in March, up 16% sequentially and up 86% year over year. So if they can keep this facility open, I tell you what, it's basically printing money over there at Tesla. Now, moving on to the technical segment of the show, we'll kick things off with Facebook. I will zoom in on kind of our, more recent price action over at Facebook. And I tell you what, the markets, at least on a daily chart, are literally telling you two different stories, okay? In the very shorter term, I mean, we're talking about over the last couple of weeks, you could argue that if Facebook bounces next week, okay, we're looking for a bounce with Facebook sometime next week, even if the stock walks back a little bit lower, closer to maybe $200 per share, but then bounces up, you could argue that, look, this stock is making what could be, like an uptrend, right? Okay, we're going to chop our way up. An uptrend is higher sets of lows and higher sets of highs. One thing that I look with this Facebook chart, if we want to make a higher sets of highs, the stock is currently at $210 per share. If we want to make higher sets of highs, it's actually a pretty strong move, all the way back to $435 per share. Now, I said it's painting two different stories, because the other story that we could be painting is the fact that we're making lower sets of highs now. Okay, we've got a high up here at 240. We made a lower cluster here at about $230 per share. If Facebook turns negative, again, we have earnings with Facebook on 4/27, so not next week, but the following week. Well, if we break below these previous sets of lows down here at 186, well, now we're just kind of confirming this downtrend. And so what I decided to do was actually pull this up on a monthly chart, and you see here it paints just a slightly different story. The fact that we're just going sideways with this company. Okay, yeah, we have this big red candle right here, but these last two candles are basically inside each other. Okay, and we're consolidating pretty tightly with Facebook, from about $210 per share up to about $224 per share. Obviously, there's some deviation in there on certain days, but for the most part, on that monthly view, we're starting to go sideways with Facebook, which really tells me we're going to want to go one way or another. And again, I know none of you are tuning into this channel to have me tell you stocks either go up or they go down, but right now we're kind of in a holding pattern, and it makes a lot of sense, okay? Especially with a company like Facebook. They don't report earnings for another 11 days or so, 11 or 12 days. And so, quite frankly, investors are just kind of sitting on their hands on this one, and it's chopping sideways. We'll see if we get confirmation one way or another. The confirmation you're looking for with Facebook is a break above 230. That, in my opinion, would be pretty bullish. Now, if we break below, I would say this 195 area, that would not necessarily be bearish, but it would show me that this uptrend is basically over. Moving on to Apple, from a technical perspective, painting a very very similar story to Facebook, right? Okay, now we don't have that mega drawdown, and quite frankly, we're a stone's throw from the all-time highs at about $182 per share on this one. We're currently sitting at about 165. We have sliced through two kind of very thin areas of support. Once at 175, we slice through this area at about 167. But if Apple keeps working its way back, I'm not really concerned, okay? Especially as we have this lower trend line down here. If we kind of bump our heads onto that, that certainly can create some buying opportunities. Again, we keep in mind, Apple is reporting on April 28th. And so my guess is this stock is likely going to continue to kind of chop sideways in the shorter term. Now, moving on to Amazon, speaking of chopping sideways, the stock is not doing anything different. Now, from a very shorter term perspective, you could say, yeah, it's kind of looking like it wants to do like one of these kind of upward channels at some point. But again, we complicate the situation a little bit that earnings are literally like 2 weeks away on April 28th. And so it wouldn't surprise me if this stock just kind of stays in this range that we've been in, and we'll see if it breaks out or breaks down based on those earnings. The low end of the range is down here at about 27.50. The high end of the range is 3,500. And until Amazon breaks out of one of those two ranges, we basically just assume this stock is going to be range bound for the time being. Now, moving on to NVIDIA, this one actually, okay, so we talked about with Facebook how we're kind of waiting for it to either pull back down here to the lows or break to the highs. Well, here's NVIDIA. It actually did that. It pulled all the way back to the lows that we made back in March. We're basically sitting on them at 212. I tell you what, if you like NVIDIA, you like the valuation, you're not concerned about the competition from Intel or the pull forward from the PC demand, all that type of stuff. If you're bullish on NVIDIA, this has been a place to buy. But talking out of the same side of my mouth, if you break this level, which like literally right here, I mean, maybe another $5 or $6 down, you break that level, there's not a lot of price action or sideways consolidation holding this stock up. I would not expect it to just slice all the way down to our kind of target valuation and target range of NVIDIA. But if it does continue this downtrend, it just shows me that this red bar is basically back intact. This was just a temporary kind of head fake breakout, and then we are likely headed downward with NVIDIA. Again, depending on how you look at this, depending on how much risk you want to take, keep in mind that NVIDIA does not report earnings as soon as the rest of these companies. They're still over a month away on May 25th. So we've got some time with NVIDIA, and we'll see how it kind of navigates those things. Now, complicating the situation is I do believe you have AMD and Intel reporting before NVIDIA. So you do get kind of a window into the company. You also have TSMC and a couple other chip makers out there that give you basically an idea on how well or badly NVIDIA could perform. That could impact the stock as well. But again, I know none of you tune into the channel to say, well, this stock's either going to go up or down from this situation, but it's just showing you, especially with NVIDIA giving back this entire leg that we kind of made in the month of March and April, it makes me believe that maybe potentially Facebook, again, depending on how the earnings go, I think it's more earnings dependent than technicals at this point with Facebook, that could give back. We also see a similar pattern starting to form with Apple. That could be given back. If NVIDIA is a leading indicator, well, I tell you what, all these stocks are ready to go even lower. We'll see what happens there. Moving on to Netflix, this also painting the identical story that NVIDIA did, although it hasn't come all the way back to the lows that we made kind of back in March, down here at about $330 per share, but we're a stone's throw there. Another stock, again, keep in mind that Netflix reports on 4/19. It's the first of all of these companies report just 4 days from now. That will likely move this stock one way or another, because if you flash back to earnings on Netflix, it can spike the stock up or down depending on those subscriber numbers, depending on the net income and all those types of things that we always look at here on the channel. If you got some stones and you believe it's going to be a good report or going to be digested well from the market, well, this can be an area. If we break this area of 330, who knows where Netflix goes? Okay, yeah, there's some support for the stock down here, but it's south of $300 per share. That certainly would get me very, very, very excited about this stock. You get down below this $300 per share, I think that's when, not necessarily you open up this full position, but that's when you really, really start to think about this one from a buying perspective. Moving on to Google, much like Amazon, is a range bound. Bottom end of the range is down here about 2,500. Top end of the range is 3,000. Guess what? Right here here at 2,500. Also complicating the situation a little bit is the fact that Google reports their earnings 11 days from now on 4/26. Much like, I wouldn't say much like Netflix. I think Google's business is far more stable, and I think it's far more predictable as well, and certainly a much larger business over at Google. If you want to step in and buy, if you're dollar cost averaging Google and you're not just doing it like on the first of the month, you're just kind of doing it, at your own leisure, you're trying to pick good technical levels. Well, I tell you what, starting on Monday, you could step in here and pick that one up if you feel like it. Just keep in mind with Google, you break through this 2,500 level, and we don't know where it would go from a technical perspective, but more than likely, we're looking for a bounce at that level and move higher. Complicating, again, the situation is the fact that we have earnings. Now, Microsoft, very similar to NVIDIA and Netflix and Google, quite frankly, is showing you that we have basically given back all these gains that we started to make towards the end of March and into April. We basically give them all the way back. There is area of support, essentially right where the stock is at about $280 per share. There's a level of support there. Wouldn't surprise me, though. You could plus or minus that by about $10. You could get down here to about 270 again with Netflix. Just like all of these stocks. In the shorter term, they're starting to chop. If you stretch this out to kind of, we'll go out to like a weekly view, you're basically just consolidating in a range. Yeah, we had this kind of topping pattern that we made with a lot of stocks towards the end of last year before you had rate hikes and really, really bad inflation. Essentially, Microsoft is trading between 270 and 307, and we're basically at the bottom end of the range, and if you want to step in there, you certainly can do that with Microsoft. Now, moving on to Tesla, also giving back, but not quite as much. This is actually looking okay with Tesla. There is some support down here at about $900 per share. If you want to step in there, that certainly can be something that you do. If this stock continues to walk back, you're not really concerned because you have a lower set of highs here, lower set of lows, higher set of lows. If this stock continues to pull back heading into next week, if it stops here at 900, which I think a lot of people from a technical perspective would expect that, well, all of a sudden you will bounce here and go higher. The other thing, though, again, I'm going to talk out of both sides of my mouth, if I may. The other thing that we're starting to look at with Tesla, though, is we made highs back here in November, another grouping of highs in January. It looks like we've made another lower set of highs in April. So if you want to really, really be confident, I know some of you guys trade on a little bit shorter term. Some of you also trade on a lot shorter budget. You're kind of new into investing, and you don't want your account to go from 5,000 down to 2,000 because you kind of bought at the wrong time, or not really bought at the wrong time. It's just momentum went against you. And so certainly if you're in that camp, you're actually waiting for Tesla to kind of confirm that this is not the move it's starting to make, lower sets of highs. Again, it's not a drastic drop like we've saw, but it's maybe a slow and steady decline, or in some cases, just simply flagging sideways, which is a lot of what these stocks are doing. Again, keep in mind, 5 days from now, we've got Tesla earnings on none other than 4/20. We'll see Tesla report their earnings. That was the FAANG Stock Recap Show for April 15th. Hopefully, guys, enjoy your weekend. Happy Easter. Enjoy it. And we'll see you again soon here on the Investor Channel. Good luck with your investments.